All right, so here we are. It's October of 2022. So we are in the fourth quarter. We've gone through 3 quarters of 2022, and a lot has changed in the real estate market in those 9 months. And it seems like anywhere I go, people are asking, what's going on with the market? What are prices doing? What's inventory doing? How are things? So just want to update you. So I'm Justin Woodall with Woodall Realty Group at EXP in Athens, Georgia. And so I'm talking today about the Athens real estate market. So we're looking at Clarke County and the surrounding counties. So we're looking at Athens-Clarke, Oconee, Oglethorpe, Madison, Jackson, and Barrow County. So that's the data that I'm pulling from you for you today. So we're going to look at prices. We're going to look at days on market. We're going to look at months of inventory. We're going to look at listing inventory. So there's a lot of things I want to show you today to kind of give you an update to answer that inevitable question that I get everywhere I go is, how's the market? What's going on? Because a lot has changed. We've basically gone from, interest rates have essentially doubled since the beginning of the year. And in the spring, we were in what I would call a frenzy. We saw houses going tens of thousands above list price with multiple offers, in most cases. Whereas now that frenzy's kind of over. We're still seeing a few homes sell with multiple offers, but not nearly to the capacity that we saw earlier this year. So interest rates have definitely changed a lot, but it hasn't changed as much as you might think, and it hasn't changed the way the media might make you think. So I want to show you some real numbers, and true charts today. So I'm going to start with this average close price. So that's what I want to start with here. Let's see. We're having technical difficulty. So let me refresh my page. So our MLS system basically has changed. So the way I used to do these market updates is a little different. So I'm learning to use this system. All right, I think we're good now. So this is what I've pulled up is average close price. So that shows the chart. Let's get into the actual data, and I can pull this up here. So this is close prices. So if you notice, you compare September of 22 to September of 21, prices are way up, almost $90,000 on average. It was up in August. It's been up every single month. We kind of saw, I want you to pay attention to this. We kind of saw a peak about March and April right here, March, April, May, June. You kind of saw a peak. It slid just a little bit, and prices are back up here. So this is average. So what average, just to remind you, is all the sales divided by the number of sales, and that comes up with your average. So I want to also show you the median close price because it's a little bit different, still very similar. And if you look at median, you kind of see it peaked also in this April, May, June, and actually has kind of dropped a little bit on median. Now, how is median different than average? Median is the midpoint. You take all the sales, what's that middle point? So basically, half the homes sold below 330,000 in September, half the homes sold above 330,000. So you see it just a little bit lower than what I would say the frenzy in the spring that we saw. And you compare it to last year, it's still way up. Every single month is still way up. So we're not seeing prices really slide. We're kind of seeing things level out a little bit, especially when you compare over previous months and when you look back over a year. And then you look back 5 years, and it's just it's unbelievable how much prices are up. So what about number of sales? Have we seen the number of sales drop? So I want to show you that as well. And when you look at number of sales for 2022, let's just pull up the chart real quick. And this is kind of the seasonality. You see each year, sales peak obviously in the summer. So you kind of see that seasonality. But just comparing, again, September of 22 to September of 21, fewer homes sold this year than last year. August, fewer homes sold this year than last year. So what does that mean to us as real estate agents? Yeah, we got fewer transactions, which means we get paid fewer times. So it's definitely going to impact the real estate industry a little bit, and us as realtors. But so why is this? So then I asked the question, why are we seeing fewer sales? And in my opinion, it's a combination of rising interest rates, which has pulled back some demand. And I'll get into that a little bit more. But also, we're still at low inventory. And I'm going to get into that in a second to show you what the inventory levels look like. So, fewer homes sold. And then you get back up in here. And even this spring, fewer homes were selling. So, again, I think it's a combination of the two. So let's look at inventory and just see how that compares here. Let's see. Again, bear with me. I'm still learning our new system. So active, we've got active listings and then new listings. And I want to show you both. So this is the active listings per month. So we're going to show you that. And if you notice, look at the chart first. So going back 5 years, we were floating between 1,400 and 1,600 homes for sale in the region that I mentioned earlier, in the Athens and surrounding counties. So, but now we're down here. And so inventory is still at record lows as far as a number of homes that are available. And I'll also show you how that gets into days on market and things. It's all correlated, but I want to show you the whole big picture of all of it today. So when you really break down the data, get granular with it, what are we looking at? So there's only, for September of this year, there are only 502 homes available for sale in that region, whereas last year there were 769. So yeah, fewer homes sold this year compared to last year, but there were more homes available last year compared to this year. So they kind of go hand in hand a little bit. If you notice here, June, July, these numbers are way down from last year. So inventory is so low. And I think that's why prices are holding. So yeah, demand has pulled back, and it needed to. I mean, we can't see a sustainable, it's not sustainable for homes to appreciate 15 to 20% per year, which is what we were seeing. So what has happened is, as rates have risen, the demand has pulled back, but also inventory is so low that we're not seeing things collapse. And so whereas going back over a decade ago to 2008, 9, 10, 11, I was in the business then as well. And what happened then was we did have the demand pulled back and we had high inventory. So I'll show you that a little bit more in a second as well. Actually, let's just go ahead and do that and go back 10 years and look at the inventory levels. Yeah, so see, there were over 2,000 homes for sale in 2012 in the Athens market, and not enough demand to absorb that. And that's why prices were falling during that region. And over time, you've seen that inventory drop. So it's way, way down. Let's go into number of new listings each month. So are we getting enough new listings that we can increase the inventory some? We're really not. And when you compare this year to last year, fewer homes were listed in September of 22 as opposed to September of 21. Fewer homes in August, fewer homes in July, fewer homes in June. I had a few more in May. So, but overall, you see the trend is fewer homes are being listed, fewer homes are available. So even though the demand is dropping, prices are not, because that's allowing prices to stay stable just because there simply is not enough for sale. That's your basic economics, supply and demand lesson there. So what does that do to days on market? It's so funny. I talked to a guy just this week. He had his house on the market and he took it off. And I said, well, tell me about that. And he said, well, it was on the market for 40 days and didn't sell. So I took it off the market. And so it's almost like our perception and our paradigm has shifted over the last couple of years, and we've gotten used to homes selling so fast. And so let's just pull up the average days to sell over the last 5 years. And yeah, so you see it, we've gotten used to, I guess in April, 19 days on the market. Now we're at 32 days on the market. So it's taken a little bit longer. But again, it's, you compare it to 5 years ago, it was taking 3 or 4 months for homes to sell. And I can tell you, you go back further than that, and, it was taking 6 months to a year sometimes to sell homes back whenever the market was down. So again, just to kind of compare the median to that, median, it looks a little shorter. That means, back in the spring, half the homes were selling faster than 7 days. And that's what was happening, is literally 50% of the homes would hit the market, and by the first weekend, they had multiple offers above list price and they were selling. That's what we saw during this window right here. So what's happening now? Yeah, it's taking about 3 weeks. So they're not selling that first weekend. They're not selling with multiple offers. Occasionally they are. We are seeing some of it, but they're not nearly at the same pace. So now half the homes are selling in less than 3 weeks. Half the homes are taking more than 3 weeks to sell. So again, not a huge change, but the days on market is a little bit longer. But again, you compare it to what we saw 5 years ago, or even 3 years ago, and we're not quite there. So that's days on market. And so I also want, now the next metric I want to show you is months of inventory. And this is probably, to me, the most critical one to watch. This one speaks the most volume to me as far as what's going to happen in the market. Are prices going to rise? Are they going to fall? And this is something we go over with every single seller when we meet with them, is months of inventory. Because if you've got a 1 month supply of inventory as opposed to a 12-month supply of inventory, then, it dictates how you need to price. If you've got a lot of inventory, that means you've got a lot of competition, and you need to be the best of the best if you want to sell. When there's not much for sale, you don't have to be that great. You just have to put it out there at a reasonable price, somewhat reasonable price, and it will sell. And so months of inventory, and actually, I want to go back all the way to 10 years. It will not let me do more than 10 years. But if you look at the months of inventory back in 2012. And if I could go back to 10 and 11, I can guarantee you this number would be higher. So let me just click over to the data part here. So so in January of 2012, there were an 18-month supply of homes available. What do we have right now? Here's 2022. There's a 2 to 3 month supply of homes available. So there's still relatively low inventory. It's still a seller's market. Again, the frenzy's over, but it's still a seller's market. There's still very low supply of inventory. I just showed you earlier the number of new listings that are hitting the market, the number of listings that are on the market compared to previous, the amount of demand that we've got. Inventory is still really low. And again, that's what's keeping prices from collapsing. What happened back here? And again, I can tell you it was more than 18 months in some places back in 10 and 11, is because you had so much inventory, you had so many homes for sale, and the demand was so low. That's what caused prices to collapse. If you remember, so many builders were building, builders were just turning keys into the banks. There were houses everywhere sitting, and the demand fell out. People were losing them to foreclosure, which meant more inventory coming on the market. Nobody was buying. And so we had a huge supply of inventory and a low demand, and that's what caused the prices to collapse. This year, demand has pulled back a little bit, but the supply is so low that we're not seeing prices collapse. Now, could that change in 6 months or a year? Possibly. The demand would have to continue to pull back even more, I think, for prices to, because we're not seeing an increase in supply. Builders are not building at the pace they were building many years ago. And so it's just, where's the supply going to come from? So unless somehow there's a ton of supply that hits the market and the demand also continues to fall out, that's when you could see prices. So, we're going to continue to monitor this. Again, this average days on market, not average, months of inventory, the absorption rate is what we sometimes call it. And I will tell you, we're showing 2 to 3 months here as an average. And again, this is the broad scale, the broad brush of Athens and the surrounding counties. When we meet with a seller, we zero in on your specific price range and your specific area to say, what's the absorption rate here? What does the supply look like for what does your competition look like? And what is the demand? And we really zero in on that. And I'll tell you, there were some times in the spring, even though the spring up here is showing 2 to 3 month supply, there were certain areas of town, certain price ranges that there was maybe a 2-week supply. And so you got a 2-week supply of homes. It means a lot of buyers and not enough for sale. And that's when we were seeing the multiple offers bidding way above list price. And so again, it's location specific, price range specific, but on average, we're kind of holding steady for the year as far as month supply of inventory. So I hope this has been helpful. Again, if you're looking to buy or sell, it's critical that you have the data and the information that you need. And I hope this has scratched the itch that some of you have as far as what's going on with the real estate market. And I hope this has been helpful. If we can do anything for you, friend, family member, coworker, reach out to us, send me a DM, give me a call, find me online. I'm out there. I'm willing to help.